entities who are the financial service providers, the risk to the consumers and risk to the system is the report of the Financial Sector Legislative Reforms Commission, which is also in the public domain, which are being acted upon by the Ministry of Finance because of its deep imprint on the complete institutional architecture. It's taking some time in implementation because it envisages repeal of several existing legislations and restructuring the existing regulatory organizations. Because the existing regulatory structure and the laws are in terms of sectoral approach, in terms of whether securities market regulation, banking regulation, commodity market regulation, which of course is getting merged with the securities market with effect from 28th of this month, then insurance regulation, pension regulation, like that. But in the case of the FSLRC approach is to move away from the sectoral approach and to approach the system as a whole in terms of the entities, in terms of consumers and in terms of the system as a whole. And then clearly enunciating what is the role of each of the financial agency, whether if it's a regulator, what is its role. A regulator's role is consumer protection as well as microprudential regulation for minimizing failure of the entities. And then there is a separate role for a systemic risk regulator, which is given to a coordinating body under the chairmanship of the Minister of Finance, we call the Financial Stability and Development Council. Then a separate consumer redress agency called Financial Redress Agency. Then an appeal forum for all the orders issued by the financial regulatory agencies, a common appeal forum called the Financial Sector Appellate Tribunal. Like that, separate agencies have been with clearly defined tasks. But the task of all of them include consumer protection. All of them include, other than the appellate forum and things like that, I am talking of the regulatory agencies, include microprudential regulation and a separate agency for systemic risk regulation. So whether this will solve the problem is a question which we will see in future. We have not experimented with that system as a whole. But that is the considered thinking which has evolved after 2.5 years of intensive research and discussion with financial market practitioners and lawmakers and regulators from India and many other jurisdictions where regulatory reforms and changes are being talked about. So we are in the process of implementing, Ministry of Finance is in the process of implementing along with the other regulatory agencies in position. And I will stop here and then request my co-panelists to speak in the order which is specified by the program managers. And then we can answer questions at a later stage if time and the organizational structure permits. Thank you very much. Second is Bitu. Bitu.
I have a few slides. Thank you for having me here, and thank you, Dr. Nair. When I saw the topic, I had exactly the same reaction that Dr. Nair had, that we should not be talking about capital markets, we should be talking about financial markets. And so I changed the title. I took the liberty of changing the title, and it was good to hear from Dr. Nair that we are talking here about financial markets. In India, the word capital market is often associated with the equity capital markets. You know, the NSE and BSE have a capital market segment. So that's what people think when they hear the word capital markets. Of course, those who know then expand it to equity capital markets plus debt capital markets. But then we also have other markets like the currency markets and the commodity markets and all kinds of OTC and exchange traded and various different forms and shapes of these markets. So all these markets perform the same role fundamentally of allocating capital and allocating risk. But over the years, as Dr. Nair points out, the system has become very, very complicated with all kinds of different players acting in all kinds of different ways, making it very hard to understand what is going on, and people being worried about where all this is leading us, whether finance is, whether the horse is in front of the cart or the cart is in front of the horse. The profession of finance, whether it is serving the economy as it should, or whether the profession of finance is extracting value from the economy. And some of this has played out post the global financial crisis with the size of the financial sector shrinking, the employment in financial sector going down, and financial sector jobs, especially jobs like investment banking, no longer being the kind of preferred jobs that they used to be, and which I think is a good thing. And I will, considering that I represent the CFA Institute, which is a body of investment professionals, I will try to talk a bit from the point of view of the professionals, and I would also echo some thoughts that Professor Corvi, expressed earlier about the competencies that are required and how we train professionals, and what is the contribution that professionals will make going forward to the development of the financial sector. So I'm addressing the younger folks at the back more than the relatively not so young folks in the front. So just a bit about CFA Institute, the organization that I represent. We are a non-profit global membership body of about 130,000 investment professionals. So typically the members, the charter holders, the CFA charter holders or members are fund managers, securities analysts, valuation specialists, performance specialists, investment performance managers, and so on. So they participate in the value chain of investment decision making. So in order to become a member, you have to pass 3 levels of CFA exams, which I understand that many of this class sitting here are already candidates. And then you have to have 4 years of investment decision making experience to become a charter holder. You also have to sign up for a professional conduct statement, because ethics is central to the practice of investment management, and CFA Institute puts ethics at the center of everything that we do. What you know is important, but how you practice your profession is equally, if not more important. And a lot of our troubles come because people have forgotten that lesson, and people have chosen to take the path where they could make more money, or they could act against the interest of the customer, and so on. So we keep that as part of our core education process and our continuing conversation with members. So our mission is to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. We added these 6 words at the end about 3 years ago, when after a lot of introspection, we felt that it's very important to keep reminding ourselves that whatever we do is for the ultimate benefit of society. The profession of investment should be working, as I said before, in order to improve the lives of people. And that's one of the reasons why we have focused more attention on India and China in the last couple of years. We've set up an office in India, in Mumbai, and another one in Beijing, because these are 2 countries where we believe that a lot of financial sector development is going to happen, and the kind of work that the Institute has done in promoting best practices and standards in other parts of the world, in engaging with regulators, policymakers, and bringing some of the expertise and the work that has been done in other parts to India as well. We have about 1,400 members in India, but we also have 20,000 candidates, which is a big skew. It's the largest imbalance between members and candidates, because a lot of our candidates are young people, students who don't have the experience required to become charter holders. And we believe that with time, as the industry grows in India, we will have more and more members from India. So right now the members are all from the West, US and Europe, and the candidates are all from China and India. So China is number 2 and India is number 3 in terms of candidates, and China is expected to overtake US as it is overtaking in almost every measure at some point in time in the near future, in terms of candidate numbers. Now, China is a little different from India because there the level of economic development is ahead of what we are seeing here in terms of in all kinds of economic, indicators like the growth indicators and per capita income, and people have moving out of poverty, urbanization, and so on and so forth. Here we are yet in the process, though the next 10 years are going to be very important for India in that process. So in China, the firms are already globalizing. For them, the global standards have become very important, and so the importance of CFA charter is already present. Whereas here, we think that is going to happen in the coming years. Many of our senior charter holders are working as chief investment officers, or heads of research, or senior government officials even, and so on. So we think that the leadership that these members will provide will help us engage with the industry here. So now I will talk a little bit on the topic that has been given from the global point of view, and I will focus on a particular slice of it, that is what's happening in the investment industry, right, in terms of the assets under management, wealth, and so on and so forth. So, and then we will lead that conversation into the forces that are shaping some of the things that Dr. Nair talked about, the forces that are shaping the evolution of financial sector globally, as well as in the world, as well as in India, as India converges with the rest of the world. So we can see that at this time, the assets under management in Asia ex-Japan is very small compared to North America and Europe, and this is expected to grow with time. And these numbers are going to, the bars here are going to go up in the next 5 to 10 years. We talked about what happened to the industry, the asset management industry itself, and post the global financial crisis. Now, this is for those of you who are seeking a career as an investment professional. So there was this feeling that it's very hard to get jobs and so on. We believe that India hasn't quite hit the inflection point, and those of you who are entering the profession right now will have great career prospects if you do the right things early in your career. The profitability of asset managers will rise as, we will hear from Dhirendra Kumar later, as the size of the industry grows, because the number of people that you need to manage those assets is not going to grow at the same scale as the size of those assets. So we expect people to make, companies to make more money from asset management. So similarly, you can see all these other numbers about pay, revenue, profits, and assets under management per employee. These are global figures. And you can see that after dipping around the global financial crisis, these have been rising, especially if you see the profits per employee. Part of this is also because of the way technology is working, and I'll touch upon the technology issue. We have been discussing this whole financial inclusion and the way more and more people's lives are going to be touched in terms of their access to basic products like credit and savings and insurance, pensions, etc., and how that is going to translate into the prospects for the into the investment management industry as a whole. Now, one of the big trends that we see is that passive management will grow in importance. And also the, in India we pay a lot of attention to mutual funds, but now slowly the pension funds are becoming more important. Other types of innovations are happening, and endowments will become, we will have more and more money. Some things will have to change in terms of policy and regulation and so on. But eventually, as India converges, we will find that many of the things, alternatives, for instance, you can see that from 2004 to 2020, the estimates, the share of alternative is growing from 2.5 to 13%. And we have a very good private equity and venture capital industry in India. And I see that industry as prospering, and some of you who are thinking of entering that industry, it's good for you. I may be, digressing from the from our topic a little bit, but I'm sure that some of you are interested in career prospects, so I thought that it is relevant to talk a little bit about this when I'm standing here in front of you. Now, one problem that investment managers are grappling with is that they have this existential issue of whether you can outperform the market, and active management has been at the receiving end of a lot of criticism. Though it's hard to see how the whole market will work if everybody is passive. Somebody has to do the work of figuring out what is the value of the company and whether it's right to invest at this point or not. But we expect to see passive funds rising, and the investment professionals have to justify their existence, in the sense that are you really adding value? Nobody is going to pay you if you're not adding value. You can invest in an ETF or a passive fund or even a smart beta or whatever it is, but you can't ask, as an investment manager, you can't ask people to pay you for value that you are not delivering. Now, this is an important slide. As you can see here, someone talked about it in the morning today, that the number of high net worth individuals in Asia is going to grow very, very quickly. Now, because populations in other parts of the world are aging, so we are going to see, and in India, we have this whole demographic dividend in the next 10 years. If you look at the population, the working age population, and the proportion of the working age population to the relative population of dependent population, we expect a lot of high net worth individuals to bring their investment, to have savings, and they will need to be served by a growing wealth management industry. Now, this industry is also at the risk of shooting itself in the foot, because when we see some of the practices, today, Dr. Nair talked about the Sumit Bose committee report, and if you talk to people who work in this industry, you know that the customer is not really being served. The interest of the investor is not really paramount. The advisors are acting as sellers of products. They are not acting as someone who is helping you invest your lifetime savings. And unless the wealth management industry changes the way it works, we are going to have a backlash of people not trusting. Finance professionals are not trusted today. They are trusted even less than politicians and media people and lawyers and doctors and so on. But and that is a trust that people like you have to win back by setting higher standards and leading the industry. We're talking about creating the right leaders for the industry, so that we reshape the wealth management industry in order to serve the customer's interest. And this applies as much to the bottom of the pyramid as it applies to the top. We see a lot of discussion even in US that the poorest of the poor are not being served by. They have to pay higher interest rates for loans. If they're making a payment, the cost of making that payment is higher. They are shut out from so many different ways to broaden their opportunity set. And you can expect the same thing from corporate India. Whatever corporate US banks and asset management firms are doing, Indian firms will do the same thing, and customers, regulators, and media will have to act as watchdogs, right? And it's very good if, as professionals, we understand our responsibility and we also do something about it rather than focusing too much on ourselves and how much money we can make in our jobs. I will not focus on the growth of the Indian asset management industry because that's not my area. Dhirendra will talk about it. And I will come next to the next topic, which I wanted to discuss a little bit about the forces that are reshaping our industry. One force that Dr. Nair touched upon or went into great detail about is the regulatory force. So we know that the regulators are breathing down our neck, and they are not going to let us do whatever we did, which led to the excesses of the global financial crisis. Now, we don't know whether the pendulum has swung too far to the other side, whether we are facing the problem of too much finance or whether we are facing the problem of too much regulation. There will always be a tug of war between these two. And in India, it's more important than other countries to figure out the right balance, because as Dr. Nair pointed out, the regulators stymie the development of the financial sector and do not allow the financial sector to do its job in delivering its services in terms of credit and pension and insurance and all those things. Then the loser is the man on the street who really needs this in order to make progress in life.